Hi, this is Zach Mayer with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 27th of August. Starting off with the FTSE 100, which is still within that broadening triangle from back in May. The top of the triangle there, 84.20. We're looking for that as the initial target. Above that, looking for as high as 86.30 at the top of that rising trend channel from basically last August. And looking for that by the end of next month. Obviously, that seems rather ambitious, but we've got a U-shaped turnaround here, breaking through recent resistance around 83.80, and an end-of-day close above that could take us up to the promised target. On the downside, support obviously at the 50-day line there around 82.20, and the worst case now is that we have to head back down to the floor of that rising channel, and the May support line projection there around 80.30. But with our RSI bouncing above neutral 50, it looks as though we are on our way after the potential mid-move consolidation breakout that we are looking for by the end of today. Next up is the DAX, and here we've broken that line of resistance, sort of third time of asking there, 18,600 above that, looking for the market to obviously retest the best levels around 18,900 and head up to as high as 19,800 by the end of next month at the top of a rising trend channel. From October, not expecting any downside to be greater than 18,200 and the rising 50-day moving average. The Dow's next, and as promised, it's heading to the record levels, and here breaking that July resistance line there around 41,000 above that, looking for the top of the rising trend channel from the end of August last year, 42,600. Obviously, we're in the run-up to the presidential election, and also in the run-up potentially to sharp interest rate cuts to make sure that one candidate has more chance of winning than the other. On the downside, hoping that support here will remain above the top of the gap there, 40,300. Moving on to Bitcoin, which seems to have revitalized itself in the last few days until we got blocked at 65,000, but still above the rising 50-day line there, just around the 62,000 level. The longer we stay above that, the greater the chance of a move up to the main March resistance line projection there at just under 70,000. Still looking for that by the end of next month. If we do break down, there's the 60,000 area, which is the floor of that channel from back in October. Worst case at the moment, probably just the last swing low there, 58,000. Moving on to gold, which has been, or was, something of a hero over the past, or the recent past. We bounced off old August resistance there around 25.20. Above that, looking for the top of the rising trend channel from back in December as high as 26.40 by the end of next month. Worst case here is that we have to test the floor of the channel there for 24.30 and the 50-day line, but it looks as though hopefully we'll stay on the right side of 2,500. Moving on to the stocks, and I thought it was a good update today from Belluscura. We've also got a gap off the low there, which means that the setup from the end of March is a bear trap island reversal, one of the strongest setups that we have on a charting basis, and an end of day close above the 50-day line today at 13 pence should be enough to give us confidence that we'll head up to as high as 30 pence by the end of next month. Obviously, there is initial resistance there at 17 pence in the 200-day line. We haven't been above that since this time last year, and if the shares are to fail, that is the most likely place that they would fail. But don't forget the bear trap island reversal. Onto a stock which I hardly ever look at, which is James Cropper here. The potential there of a bounce off a falling price channel there, that's been in place since the beginning of the year. The level there around £2.40. The longer we can stay above recent resistance at £2.50, the greater the chance of a move not only to the 50-day line there around £2.88, but also even up to the top of that falling channel and the 200-day moving average near £4 by the end of next month. Not sure what would do that, but at least we have a journey up to the 50-day line and can then take our chances from there. Moving on to the Aquis market, where I'm the only person who actually looks at stocks on Aquis, it would appear, and obviously get no credit for that at all. The stock in question is EDX Medical, which actually looks like one of the best stocks on Aquis. Great potential here, and rising trend channel there from last October, bouncing above the 50-day line now, rising around 9.3 pence, and we're looking for up to 16 pence by the end of next month, or even sooner on that. We gapped up through the 50-day line back in June, and that was a very strong charting signal for the shares. Moving along to another stock which was highlighted here recently, and on the run that we had up from around £1 to up to £1.90 plus. Another gap higher today, and on that basis we're looking for the second target there, £2.20 over the next couple of weeks, and as high as the former target there, around £2.90 by the end of next month. We're assuming that when this stock moves, it can really move as it did back in April as well. Only back below the floor of the latest gap there, £1.74 or so on an end-of-day close basis, really delaying the upside scenario. But we've had 3 bounces for the RSI at and above neutral 50, which is a very strong signal. That's sort of the type of signal we've seen in gold over the recent past. I talked about GreenRoc on the 14th of August, and took a little while for the shares to revive themselves. In fact, there was a bit of a bear trap there just last week, on Friday, before the latest announcement. The shares now above the 50-day line there at 1.5 pence. Above that on an end-of-day close basis, and that's above also the old July resistance. Looking for the stock to hit that, to the top of that triangle there from January, as high as 2.8 pence by the end of next month. Obviously, once again, there's the 200-day line there to clear at £1 at 1.9 pence, but hopefully this time the shares will deliver the goods. Moving on to Hummingbird, where it's been slightly frustrating in terms of share price for the price action, but at least the longer we stay above the latest, or the old support there from August at 7.75 pence, the greater the chance of the shares heading back to 10 or 11 pence resistance, which is basically the post-March resistance for the stock. But the key here is to have as many end-of-day closes above 7.75. On to Helium 1, which has had its bi-monthly placing. That sort of adjusts the technicals here, or at least the price channel that we have on the daily chart. What a surprise that the shares fell on Friday ahead of today's placing, and very encouraging, though, on the other hand, that the shares have remained above the placing price there, and the 50-day moving average at 1.2 pence. Above that, we're still looking for 2.4 or 2.5 pence, perhaps by the end of next month. Initial target there, though, the top of the gap there from Friday, 1.75 pence. So we want to see an end-of-day close above that either today or tomorrow. Only back below that 50-day line, really delaying the recovery there. The stock market darling effect still working for the stock. Moving on to Hydrogen Utopia, where it seems the CEO is very generous at the moment. We've had a bit of a rebound here from after the gap down that we had basically a week or so ago. We want to see an end-of-day close back above the top of that gap there at 6 pence to then revive the potential of the shares being in a rising trend channel. Obviously, we've fallen out at the bottom of that channel, and if you're fussy, you probably want to see the shares break that resistance line there from back in March, also at 6 pence. Moving on to a stock which is not quite so volatile in terms of its price action here. It's just been a vertical move after the unfilled gap to the upside that we had on the 15th of August. Kazera also has a rising 50 and 200-day moving average, which, as I've said before, tends to be the strongest part of the cycle for a stock or a market. Still looking for 1.1 pence, 1.15 pence over the near term, hopefully by or well before the end of next month, and while we remain above 0.8 resistance, which is now hopefully support. On to Narf, which is not exactly a frequent flyer here on the bulletin board here or anywhere else, but it looks as though we've got a mildly rising trend channel there. We've gapped off the lows and above the floor of the gap there at 0.87. Looking for the shares to at least head back to 1.2 pence in July resistance, even if they fall again back after that. Best case, obviously, the top of the channel there at 1.75 pence over the next 1 to 2 months. Moving on to Neo Energy, and here we've hit our 1.7 price target there, and looking for perhaps another move after a bit of consolidation. Current situation is that the favoured new target would be up towards the 2.4 pence area, but we want to see an end of day close above the 1.7 pence level in order to get that particular scenario underway. Ideally, we stay above the old resistance on the way down, and that was basically around the 1.4 pence, the initial spike for the shares. Finishing off with Shields Therapeutics, which I've covered quite a lot. Shares hitting that second target there again at 4.75 pence. Want an end of day close above that to give us a move back to the old October-February support there, around 5.75 pence, hopefully by the end of next month. In the meantime, we want to see the shares remain above the 200-day line at 3.6 pence. That's it for me today. More updates tomorrow.